Institutions are buying. Whales are selling. Is this the reason for Bitcoin stagnation? In other news, Trump's mega law introduces new proposals for crypto taxes. Crypto cards in Europe are overtaking banks in everyday purchases, and what the European Commission says about stablecoins. Welcome to this week's Crypto Pulse. Although numerous companies and Wall Street investors have started massively buying Bitcoin through so-called ETFs, its price has remained almost unchanged for several weeks. According to analyst Charles Edwards, the reason is that long-term Bitcoin holders, often called OGs, are selling their coins to institutional investors who are just entering the market. All this creates pressure on the price, as new purchases merely replace existing sales. Despite this, the number of companies adding Bitcoin to their treasury is rapidly increasing, including even real estate companies and mining firms. Traders are currently still waiting for important US economic news, which means Bitcoin's price continues to move within a narrow range, between $102,000 and $110,000. Who will win, institutions or OGs? The US Senate is debating a comprehensive tax budget bill, supported by President Donald Trump. During the debate, proposals have emerged that could significantly impact the crypto world. Senator Cynthia Lummis has proposed legislation changes that would eliminate unfair double taxation for miners and those who earn from holding or staking cryptocurrencies. Her idea is also that everyday crypto purchases under $300 would not be taxed, up to a total annual limit of $5,000. On the other hand, Democrats proposed a ban preventing politicians and their family members from promoting or owning cryptocurrencies at all, but this proposal was rejected. Well, Elon isn't enthusiastic about this law, but for other reasons. If you've liked the news so far, then hit the like button, comment below, and don't forget to subscribe to our channel so you don't miss the following videos. The use of crypto payment cards in Europe is rapidly growing and is already competing with traditional bank cards, especially for small everyday purchases. According to collected data, almost half of all crypto card transactions amount to less than 10 euros, meaning it's mainly micro purchases where cash once dominated. The average spending with crypto cards amounts to 24 euros, which is somewhat less than the average for bank cards. People use crypto cards for grocery shopping, restaurants, transportation, and online shopping. It's also interesting that most transactions are powered by stable cryptocurrencies, such as stablecoins, which means less volatility. Despite the growth, banks like Barclays are introducing restrictions on crypto purchases via credit cards, as they're concerned about user debt and lack of protection in case of losses. Very interesting data.
The European Commission advocates for a more relaxed approach regarding stablecoins than the European Central Bank, which warns about the danger of bank runs and instability. The EC believes these risks are very low in practice, as most of these coins circulate and have reserves outside the EU, mainly in the USA. According to the Commission, the existing MiCA legislation is strong enough to contain potential risks, and that overly strict regulation would limit innovation development and global crypto usage. The Commission's stance has pleased the crypto industry, as it means issuers won't have to separate between coins issued in the EU and elsewhere. This way, the use of stablecoins will remain simple and unified, which is important for users and companies operating cross-border. Quite positive news from the EU area. Thank you for watching, and see you in the next episode.